All my dear students, how are you all? So now today we are on the last session of these revisionary classes for your auditing and ethics subject. I hope that whatever we have done till chapter number 10 and half of the chapter number 11 is all your understanding, your learning, your revision, everything is clear, because see, the purpose of these classes is to revise all the chapters, to revise the entire syllabus, right? So today, just a minute. So today, we will be completing chapter number 11, one topic of chapter number 8, and your queries, whatever you will be having, will be covering all those queries, right? So the topic that we are supposed to start for today is audit quality. So student, with respect to audit quality, SQC1, Standard on Quality Control 1, and SA 220. Just a minute. SA 220 is there, which is applicable with respect to the audit quality, right? So, see, the purpose of conducting an audit is to provide confidence to the users of the audited financial statement. And to maintain high quality, it is the responsibility of the auditor. Just a minute. Just a minute. देख रही हूँ. स्क्रीन शेयर है ना? ठीक है. So we will be discussing about SA 220 and Standard on Quality Control 1, right? So Standard on Quality Control, students, if you remember in the last session, I discussed with you the name of this essay, is this Standard on Quality Control, which is quality control for firms that perform audit and review of historical financial information and other assurance and related services engagement. And how to learn the name of this standard on quality control? See, we know that standard on quality control 1, this is applicable with respect to all the engagements, audit, review, other assurance and related services. And you all know that audit and reviews with respect to historical financial information, right? So having understood this, these 2 points, learning the name of SQC1 becomes easier, right? SQC1 and SA 220, they deal with audit quality, but SQC1 is applicable with respect to all the engagements as we have just discussed, and SA 220 is with respect to audit engagements only. SQC1 contains the responsibilities for the entire firm. So it applies to the entire firm, whereas SA 220 is with respect to particular engagement team. So particular audit engagement, right? So starting with SQC1, see, SQC1 requires that the firm, the audit firm, should have their system of quality control, which provides a reasonable assurance that the firm and its personnel, whoever will be conducting the audit or giving the assurance services, they comply with the professional standards and regulatory and legal requirements, right? Students, this line that the firm and its personnel should comply with the professional standards and regulatory and legal requirements, you will see the same line will be repeated a number of times, right? So try to understand this, that SQC1 requires the firm to establish a system of quality control which provides it with the reasonable assurance that the firm as well as its personnel, they comply with two things. That is the professional standards. So in case of audit, the standards on auditing, right? And regulatory and legal requirements. Plus, the reports that are issued by the firm or the engagement partner, that should be appropriate in the circumstances, right? And SQC1 deals with the policies and procedures which are aimed at achieving these objectives. What are the two objectives? Obtaining a reasonable assurance that the firm and its personnel, they comply with professional standards and regulatory and legal requirements, and that the reports that are issued by the firm or engagement partner, they are appropriate in the circumstances. Clear? Right? Now, there are various elements of system of quality control. That is, the system of quality control should include policies and procedures addressing various elements, and we have to discuss 6 elements. That is leadership responsibilities for quality within the firm, ethical requirements, acceptance and continuance of client relationship and specific engagement, human resources, engagement performance, and then the policies and procedures relating to monitoring of the system of quality control. So what is the purpose behind establishing such policies and procedure? To maintain the quality, to control the quality of all the engagements. Where is it contained? SQC1. Who is responsible for establishing such policies and procedures? It is the firm that is responsible for establishing the policies and procedures, right? Now, all these policies and procedures, which is very logical that these should be documented and these should be communicated to the firm's personnel. See, then only the personnel will be able to comply with these policies and procedures. And also the firm will recognize the importance of obtaining feedback with respect to these policies and procedures, with respect to the quality control system of the firm from its personnel. So they will be required to give their views and comments on the various quality control matters. See, then only when there will be two-way communication, the firm communicates the policies and procedures to the personnel communicates their views, comments, their feedback with respect to those policies to the firm, that is the engagement partner and all, then only it will be effectively implemented, right? So abhi tak we have done what? SQC1 ka kya requirement is? Policies and procedures with respect to 6 elements, and whatever are the policies and procedure, these need to be documented and communicated to the firm's personnel along with the feedback from the personnel with respect to their views and comments on the quality control matters, right? Now we will be discussing these elements one by one. So SQC1 requires the policies and procedures with respect to leadership responsibilities for quality within the firm. See, unless and until the leader, the hires in the CA firm, the higher officials in the CA firm, they set an example that quality is important, the other personals are not going to follow it, right? And students, you will see that in the entire SQC1, the language that is used is that SQC1 requires the firm to establish policies and procedures. So again, I like to tell you, or you should concentrate your energy in learning these keywords. You will see it will be repeated a number of times, and that is why I put a star, because wherever it will be repeated, you will see I have put a star again, right? So SQC1 requires that the firm should establish the policies and procedures relating to 4 things, right? So within what? Leadership qualities. First and foremost, the policies and procedure to promote the internal culture based on recognition of quality as essential or important in performing an engagement. So first of all, the internal culture should be such that it should recognize quality as essential in performing an engagement. So the culture, the atmosphere within the organization should be such that quality is given utmost importance. So policies and procedures with respect to promoting an internal culture based on recognition of quality as essential in performing the engagements. How that culture will be created? So the policies and procedure, these requires the firm's CEO or the managing partners to assume the ultimate responsibility with respect to firm system of quality control. Students, try to link the 4 points. First says that internal culture should be there, which recognize the quality as essential for performing engagement. The second point says that it requires the firm CEO and managing partner to assume the ultimate responsibility. Now, how? They should set the example. So, example set by firm's leadership, the CEO and managing partner, which encourages. So, I have put one, that is which encourages an atmosphere of what? Internal culture of uh, internal culture which recognizes the quality as essential in performing the engagement, right? So the first point says that the policies and procedures should be such that it promotes the internal culture based on recognition of quality as essential in performing the engagement. So quality should be essential. The second point says that who is going to create that internal culture? So it says that CEO and managing partner, they need to assume the ultimate responsibility for firm system of quality control. The third point says that example should be set by the firm's leader in order to encourage an inner culture which is based on or which gives quality as the important criteria when performing an audit. And last thing, the fourth point is with respect to the persons who are given operational responsibilities. So students, see, the CEO and the managing partner, they themselves alone cannot create a culture of, you can say, create a culture where quality is important. They will have to include other officials also who are given the operational responsibilities, because ultimately who is doing the work, they will have to implement quality control. They will have to see whether quality is maintained or not. So the last point says that the persons who are assigned the operational responsibilities for firm's system of quality control, they should be sufficient, appropriate, having appropriate experience and authority to assume such responsibility of the firm system of quality control. Clear? Be- Right? So try to link these 4 points. So first says that it should promote inner culture based on recognition of quality as essential in performing engagement. Then who can create such culture? Firms, you and managing partner to assume the ultimate responsibility. How? They can set example, or example is been set by firm's leadership that encourages inner culture whereby quality is given utmost importance, and they alone cannot. So how will it be done? So the persons who are assigned the operational responsibilities for firm system of quality control, they should have the sufficient appropriate experience and the authority to assume the responsibility for the firm system of quality control, and they should have the necessary ability. Clear? Is it clear? So let me just take you through the module once. So we are here on this lead. So we have discussed 17A. We have discussed 17A point. Clear? Quickly send in your replies. Is it clear? Okay. Now the next point is relating to ethical requirements. So as I told you, the language is going to be the same. So the firm should establish policies and procedures which provide a reasonable assurance that the firms and its personnel, they comply with ethical requirements. And where are the ethical requirements for CA profession given? In the code of ethics. And quickly tell me how many fundamental principles of professional ethics we have done in the last session. Quickly send in your replies. Quickly send in your replies. Yes, Om Krishna Gupta correct, Shoaib correct. 5. So when we talk about ethical requirements, see, it is so easy to understand and learn as to what will come in ethical requirement. So the firm should establish the policies and procedures so as to obtain a reasonable assurance that the firm and its personnel comply with ethical requirement given by Code of Ethics, and there are the established fundamental principles of professional ethics, which are integrity, objectivity, professional competence, due care, confidentiality, and professional behavior. Clear? This is simple. Now, students, ethical requirements, it also includes what? Your independence, right? So the observance of independence in all engagements is the basic requirement, right? So it is the basic requirement. And now we are talking specifically about independence as one of the ethical requirements. So the firm should establish the policies and procedures. See, I put a star here because the language is going to be the same. That obtains a reasonable assurance that now we are talking about what? Independence. That the firm, its personnel, including the experts, if any higher, and the network firm personnel, they maintain independence. The firm, its personnel, including the experts so hired, contracted by the firm, and the network firm personnel, they should maintain independence, right? And the policies and procedures should be such that it enable the firm to communicate its independence required to the personnel. So first of all, communication from the firm to the personnel that, see, these are our independence requirements. And then second, the firm's policies and procedures should be such that it should enable the firm to identify and evaluate the circumstances or the relationships that create threat to independence. Why? So that they can take appropriate action. What can be appropriate action? To eliminate the threat or to reduce it to an acceptable level. How? By applying safeguards, right? So this may appear to be a lengthier point to you, but if you will just try to understand, this is nothing but what you all have already done in the earlier part of this chapter, right? Or if considered appropriate, to withdraw from the engagement, right? So I'll repeat this. So now with respect to the ethical requirements, the firm needs to establish the policies and procedures so as to obtain reasonable assurance that the firm and its personnel, they comply with ethical requirements in accordance with the Code of Ethics. So the established fundamental principles of professional ethics as per Code of Ethics are integrity, objectivity, professional competence, due care, confidentiality, and professional behavior. Then one of the important ethical requirements is independence. So we are talking about this also, that the SQC1 requires that the firm should establish the policies and procedures so as to obtain reasonable assurance that the firm and its personnel, including the experts who are contracted by the firm and the network firm personnel, they maintain independence. And how will that be possible? So first of all, it should enable the firm to communicate its independent requirement to the personals. Pata to hona chahiye na, what are the independence requirement? And then to identify and evaluate circumstances and relationships that create a threat to independence. Why? To take appropriate action. How? To eliminate the threats or reduce it to an acceptable level. How? By applying safeguards. Or if it is considered appropriate, to withdraw from the engagement if the appropriate safeguards cannot be applied. Simple, right? Then it says that there should be a mechanism should exist within the firm whereby the engagement partners can provide to the firm relevant information about the client engagement. See, with respect to a particular client, the engagement partner must be having the information now. So there should be a mechanism which should exist within the firm whereby the engagement partner, who is the engagement partner? So let's say ABC and Associates is the firm of chartered accountant, and A is the engagement partner with respect to the audit assignment of X Limited. A and his team are conducting the audit. So A is the engagement partner. He should provide the firm with the relevant information with respect to his client engagement, right? And the personnel of the firm. So now in the above paragraph, we have seen that they should be told by the firm that these are our independence requirement. Now this says that personnel of the firm, they should notify the firm about the circumstances and relationships that create threat to independence, right? Also, in case there are any breaches of independence, this should be promptly notified to the firm so that appropriate action can be taken. So ultimately, with respect to all these activities that we have discussed, the objective is to ensure that the independence requirements are satisfied. Clear? So if you are being asked with respect to independence, I hope you will be able to write. Quickly tell me so that we can proceed further. And the last point says that at least annually, the firm should obtain a written confirmation of compliance with respect to the policies and procedures on independence from all the firm personnel, that these are our clients, and it will be mentioned that you are independent of all these clients. So annually, the firm should obtain a written confirmation of compliance with respect to the policies and procedures on independence from all the personnel. So I hope this point is clear. So Om Krishna Gupta is saying clear. Others also please reply. So I can see today Sukanya, Shoaib, Sunil Gangadev, Swati. These students have joined. Please reply. So Swati, Shoaib, they are saying it is clear, right? So this was with respect to the ethical requirement. Then the third point is acceptance and continuance of client relationship and specific engagement. See, students, first point was relating to leadership quality. So leadership hoga, to quality will be maintained. The leader will set an example whereby the quality is given utmost importance, right? Same way, ethical requirements, if these are met, then quality will be maintained. Now, the next point is acceptance and continuance of client relationship and specific engagements. So, before accepting any engagement, and in fact, this talks about three things, that before accepting engagement with a new client, or whether to continue an existing engagement with the existing client, or accepting the new engagement with an existing client. Clear? So before accepting engagement with a new client, or whether to continue an existing engagement, or whether to accept a new engagement with an existing client. Before considering all these things, the firm should require what? Vital information with respect to the client, be it new client or be it existing client. Why? Because it will help the firm to decide the integrity of the client, that whether they should accept or continue the work of this particular client, the integrity of client, right? Competence to perform the engagement, whether the firm is having the competence to perform the engagement. See, quality will be affected by all these things, and compliance with ethical requirements, right? And if any issues are identified by the firm while deciding as to whether to accept or continue, and the same are resolved, the firm is required to document how these issues were resolved. So if, let's say, any of the firm is having any issue with respect to the integrity of the client, the same was discussed with the firm, with the client also. And then the firm decided to accept the work of that client, how that matter was resolved. The same will be documented, right? So acceptance and continuance of client relationship mein, what we have seen, that before accepting engagement with respect to new client or existing client, or accepting a new engagement with an existing client, or the firm. So SQC1 is with respect to responsibilities of firm. So they should acquire vital information from the client to help to decide the integrity of the client, competence to perform engagement, and compliance with the relevant ethical requirements, right? And if any issues are identified, then the same should be documented, how the same were resolved, right? Now, when we talk about integrity of the client, so students, in your past year question, this question has come as a 4-mark question. Integrity of client. So what are the matters that are to be considered? So when the firm is considering, the integrity of the client, the following matters will be considered. That is the identity and business reputation of the client, the principal owners, client's principal owners, key management, those charged with governance, and related party. So these are the information that they are going to obtain with respect to the integrity of the client. That is identity or business reputation of the client's business principal owners, key management, those charged with governance and related party. The nature of client's operation and business practices. The information with respect to attitude of client, principal owners, key management, and those charged with governance towards matters. For example, aggressive interpretation of accounting standards or implementation of IC. So, what is the attitude of client, principal owners, the key management, and those charged with governance? Whether the client is maintaining the firm's fees as low. Why? Because it may have an impact on the scope of work. Later on, they may impose certain limitation on the scope of work. Whether there are any indication that the client is involved in money laundering or any other criminal activity. And last but not the least, what are the reasons of the proposed appointment of this firm, the firm who's been appointed, who is conducting all these, who is getting all these information, and reappointment of the previous firm. So if any previous firm is not been reappointed, what are the reasons for that, right? So these are under what? The acceptance and continuance of client relationship or client relationship. And whereby we have seen that integrity of the client ke liye, these are the matters that the firm is going to consider. Very important. You may get a straightforward question, right? Now, students, if there is a conflict of interest between the firm and the client, the same should be properly resolved before accepting engagement. So if, let's say, the engagement partner is holding any share, the example that we did in the last session also, that he was a nominee, right, of a distant relative. So in that case, it should be properly resolved. So either the person, I think C.A. Raman was in the example now. So either C.A. Raman should have sold those shares before accepting the assignment. So it should be properly resolved, right? And the firm should obtain information. See, the next point says that if the firm obtains any information that would have caused the firm to decline an engagement had it been obtained earlier. So if the information is such that had it been obtained earlier by the firm would have declined the engagement. With respect to such a situation also, the policies and procedures relating to continuance of engagement of client relationship, such policies and procedures should include certain policies which can tackle with this situation. What situation? That if any information is obtained by the firm, had it been obtained earlier, it would have caused the firm to decline the engagement. So such consideration, such policies and procedures should include consideration of what? Prof Professional or legal responsibility for the firm, whether there is a requirement for the firm to report to persons who made the appointment or regulatory authorities, and whether there is a possibility of withdrawing from the engagement or the client relationship, right? So the policies and procedures with respect to continuance of engagement of client relationship, it should include consideration of these two situations also. That is whether there is professional legal responsibility which requires the firm to report to persons who made appointment or to the regulatory authorities, and is there possibility of withdrawing from the engagement or the client relationship. So is it clear? Is it clear with respect to acceptance and continuance of client relationship? I'll just summarize it quickly. So with respect to acceptance and continuance of client relationship, we have seen that before accepting any engagement, the firm is required to obtain vital information. Vital is what? Important with respect to the client, which will help to decide integrity of client, competence to perform engagement of the team, and the compliance with ethical requirement. And it applies to all the cases, that is before accepting engagement with new client, whether to continue with existing client or acceptance of new engagement with an existing client. If any issue is identified, the same should be resolved before accepting and it should be documented. With respect to integrity, what all matters will be considered? Identity and business reputation of the client, principal owners, the key management, those charged with governance, and related parties. Nature of the client's operation and business practices. Information with respect to attitude of client, principal owners, key management, those charged with governance, for example, towards various matters like aggressive interpretation of accounting standards or implementation of IC. whether the client is aggressively maintaining the firm's fees as low, inappropriate limitation on the scope of work, indications that the client is involved in money laundering or any other criminal activity, reasons that of proposed appointment of the firm and non-reappointment of previous firm. Conflict of interest है properly resolved before accepting engagement. And now, if any information has been obtained by the firm, had it been obtained earlier, the firm would have declined the engagement. With respect to such situation also, the policies and procedure relating to continuance of engagement or client relationship, it should include consideration of whether there are professional legal responsibilities that require the firm to report to the persons who made the appointment or regulatory authorities, and is there possibility of withdrawing from the engagement or the client relationship. So engagement means that particular engagement, and client relationship means all the services that is been rendered by the firm to that particular client. Is it clear? So we have done 3 points. First is relating to leadership qualities. Second was your ethical requirements, and then is your acceptance and continuance of client relationship, right? Now is human resources, which is very simple. So again, the language will be the firm should establish the policies and procedure to obtain reasonable assurance that it has sufficient personnel in terms of what capability, competence, and commitment to ethical principles. So more or less, you will say ethical requirements are again been taught, but along with that, sufficient personnel with the capabilities, competence, and commitment to the ethical principles, which is necessary to perform the engagement as per professional standard and legal and regulatory requirements. If you remember, I told you that this line will be repeated again and again, and also this line. So human resources to enable the firm to issue the reports which is appropriate in the circumstances, right? And the policies and procedures should address various HR issues. What can be various HR issues? Recruitment, compensation, training, career development, performance evaluation. So basically, the emphasis should be continuing the professional development of the firm's personnel. Simple, very easy. Quickly tell me, is human resources clear? Okay, I can see thumbs up of the students. So now moving with the fifth one, which is what? Engagement performance, right? So now engagement performance. See, again, the quality, while considering the quality of the work that has been given, the quality of the service that has been given by the firm, how the engagement is performed is really very, very important. So it says that consistency in quality of engagement performance is achieved through briefing the engagement team about various things. So see, the team is going to perform the engagement. So they should be briefed, that is, they should be told about various aspects relating to consistency in the quality of engagement performance. So what all will be briefed? What is the objective of the engagement? The process of complying with engagement standards, the process of engagement supervision and training, the methods of reviewing and performance of work, and the appropriate documentation of the work performed. So briefing means that the personnel, the engagement team, they should be told about all these things, right? So with respect to an engagement performance, this is what EP here, it means engagement performance, right? So it should be achieved through briefing the engagement team about various things like objective, the process for complying with engagement standard, process of engagement supervision training, methods of reviewing the performance of work, and the appropriate documentation of the work performed, right? See, students, also when there are any difficult matters, right? When there are any difficult matters, consultation should be taken, right? And consultation, see, if we talk about, let's say specifically about audit, right? So the engagement team or the firm is having experience in accounts and auditing. Let's say certain matter relating to civil engineering is involved. So this is a difficult contentious matter, or let's say some services of actuarial is to be taken. So that consultation should be taken, and it should include what? Discussion with the appropriate professional level, and that consultation can be within the firm or outside the firm, but it should be from specialized expertise. Simple, right? Now, in engagement performance, see when the engagement is been performed, that is, let's say see, though SQC applies to all the engagements, your audit, review, everything, but here for the purpose of simplicity, I'm taking example of, let's say, your audit, right? So let's say when the audit has been performed, it has been performed, certain significant judgments are made, right? Those significant judgments should be reviewed by, so this is a new term, engagement quality control reviewer. Engagement quality control reviewer. So an engagement quality control reviewer should be appointed, and such review should be before the report is issued. So it should be before the report is issued, right? And the extent of review, it will depend upon the complexity of the engagement and the risk that the report may not be appropriate. So considering these two facts, that with respect to complexity of engagement, with respect to is there any risk that the report may be inappropriate, so the extent of review is going to depend upon these two factors, right? The review by the engagement quality control reviewer, however, does not reduce the responsibility of the engagement partner. Engagement partner who is signing the audit report, let's say for the purpose of this understanding. So the engagement partner who is signing the report, his responsibility will remain irrespective of the fact that the same has been reviewed by the engagement quality control reviewer. ठीक है? So are you now clear about engagement quality performance? Now, if we talk about engagement quality control review, student, this is mandatory with respect to the listed entities. So all audit of financial statement of the listed entities, engagement quality control is necessary. And the firm may decide a criteria to determine the cases where they require the engagement quality control review to be conducted. So mandatory with respect to listed entities, right? Now, there may be difference of opinion within the engagement team or with those who were consulted, that is the persons with specialized expertise, or between the engagement partner and the engagement quality control reviewer. So there can be difference of opinion. Clear? The report should be issued, the audit report, or let's say if it is related to review or assurance services or related service. So the report should be issued only after the resolution of such difference, which is so logical, right? And if any recommendations of the engagement quality control reviewer are not accepted by the engagement partner, right? That is, the matter is not resolved. The matter should be resolved following the established procedure of the firms. So the firm should have a procedure in order to solve a matter whereby the engagement partner and the engagement quality control reviewer are not agreeing, or let's say the recommendations of engagement quality control reviewer are not accepted by engagement partner. So what can be those ways, those procedures? So consulting another practitioner or firm or professional or regulatory body. So these steps must be taken before issuing the audit report, right? And now tell me, students, with respect to documentation, quickly tell me, I really need answers from all of you who all are attending this session. Tell me the relevant essay number with respect to audit documentation. Swati, correct. Others also please reply. Shoaib, correct. Others also. Om Krishna Gupta, correct. Others also. Please reply. So it is essay 230 and we have covered the entire essay in detail when we did chapter number 6. So the topic that we are going to discuss as a part of engagement performance now is with respect to documentation. See, documentation is a part of engagement performance itself. So I'll quickly take you through these points because these we have already covered in chapter number 6, and I'm assuming that you have already understood, learned and revised chapter number 6, right? So see, again, the language is going to be the same. The firm is going to establish the policies and procedures. so that the engagement teams complete the assembly of the file and engagement files on a timely basis uh, after the report is finalized, but it should not be completed in more than 60 days after the date of audit report. Simple. And there should be policies and procedures with respect to confidentiality, safe custody, integrity, accessibility, retrievability of the engagement documentation. Simple. Then you all know, tell me whose property is the documentation? Is it the firm or the client? Quickly, I need answers. Is it the firm or the client? Auditor, Swati, correct, right? Om Krishna Gupta, Shoaib, correct, right? So the next point is, it is the property of the firm. It may at its discretion make portions or extracts available to the client, but at its own discretion, right? Quickly tell me for how long the retention period should not be shorter than, do not look at the screen. Quickly tell me the number of years not shorter than, correct. Om Krishna Gupta, Shoaib, Swati, correct. 7 years. So I have written here chapter number 6 because we have covered this topic in detail when we did chapter number 6, right? So I'll do one thing. I'll quickly revise or summarize the entire points relating to engagement form performance, and then we'll start with the last point, which is what? Monitoring, right? So engagement performance. See, engagement performance may first and foremost, it says that the consistency in quality with respect to engagement performance can be achieved by briefing the engagement team about various aspects like the objectives, the process objectives of the engagement, the process for complying with the engagement standards, the process of engagement supervision and training, methods of reviewing the performance of work, application, appropriate documentation of the work performed, right? In case any difficult or contentious is again difficult, matter is there, consultation should be taken. Now just keep in mind, discussion with appropriate professional level within the within the firm or outside the firm, having what? Specialized expertise, right? If significant judgments were made, the same will be reviewed by engagement quality control reviewer before the report is issued, right? And the extent is going to depend upon, extent of review is going to depend upon complexity of engagement and risk that the report may not be appropriate. Review, though the same has been reviewed, the significant matters have been reviewed, but the same will not reduce the responsibility of the engagement partner, right? Engagement quality control review mandatory for all audit of financial statement of listed entities and other engagements which the firm may devise criteria to determine the cases requiring the engagement quality control review. Now comes the topic of difference of opinion. See, engagement performance का ही तो part होगा ना ये. So it can be within the team, with those consulted, between engagement partner and the engagement quality control reviewer. So the report should be issued only after the resolution of the matter. Now, if any of the recommendation of the engagement quality control reviewer is not accepted by engagement partner and the matter is still unresolved, so the same should be resolved following the established procedures of the firm with respect to this matter. So what can be that? Consulting another practitioner or firm, professional or regulatory body, right? Now comes the documentation part, because documentation is again your part of engagement performance only, because the quality is going to depend upon your documentation. So it should establish the policies and procedures so that engagement team complete assembly of the final engagement filings on timely basis. It should be completed in not more than 60 days after the date of the audit report. And then we have with respect to the retention period. So I'm not repeating it here, right? So the various points that we have covered, 5 points we have covered with respect to leadership responsibilities, then your ethical requirements, acceptance and continuance. Then we had the point relating to your human resources, engagement performance, and the last point is monitoring. So in past year questions, question on monitoring has also been asked. That is, what is the requirement of monitoring? So it basically says that whatever are the policies and procedures with respect to the system of quality control. So here it says that the firm should ensure. So it is not saying establish as we have used in the earlier 5 points. So in order to, so that you are able to remember this thing. So I've crossed this establish and I've written ensure. So the firm should establish the firm should ensure that the policies and procedures relating to system of quality control, these are relevant, adequate, operating effectively, and complied with in practice. So this is the monitoring of whatever we have studied in these 5 points. So the firm's policies and procedures relating to system of quality control. So what are those? The 5 points that we have covered. So the firm should ensure that such policies and procedures are relevant. So they should be updated now, adequate, operating effectively, and complied within practice. So what will it include? It will include ongoing consideration and evaluation of firm system of quality control. So the work that is happening, let's say the audit work that is going on. So with respect to that, whether quality has been maintained or not. So ongoing consideration and evaluation of firm system of quality control and periodic inspection of a selection of completed engagement. So let's say if any engagement have been completed, so few engagements will be selected, and with respect to those engagement, periodic inspection will be done. So ongoing consideration and evaluation of firm system of quality control means the assignments that are going on, the firm may consider whether their such policies and procedures are being complied with or not. The policies and procedures are relevant, adequate, operating effectively. Or with respect to completed engagements, some engagements may be selected and a periodic inspection of such selection of completed engagements be done. With this, we have covered SQC 1K 6 points. Quickly tell me that is it clear? SQC 1 is completed now. In case you have any query relating to the standard on quality control 1, you can send in your queries. And students, with respect to these 6 points, you can get a 3-mark, 4-mark question with respect to any of these points, right? So all these are really very, very important. And once you have understood, because see, both the things relate to what? The audit quality. But SQC 1 says it is the firm's responsibility. Now, SA 220 will say it is the engagement partner's responsibility. But if you just apply the logic, the points with respect to quality control are going to be the same, right? But more specifically, now when we'll be discussing with SA 220, we will see that the responsibilities with respect to engagement partner, and that too with respect to a particular audit engagement. Clear? So now starting with SA 220. Quality control for an audit of financial statements. Quality control for an audit. So SQC 1 was with respect to all the engagements, audit or review or assurance or related service. But this is with respect to your audit of financial statement, right? So see this SA 220. So basically it is based upon the quality control system of the firm, right? The quality control policies of the firm with respect to the audit engagements. And all these quality control policies, these are decided by engagement teams. So now here, instead of firm, we will be concentrating on two things, that is engagement teams. And now this EP means for the purpose of SA 220, engagement partner. Students, you are not required to, you are not supposed to use these short form. These are just for making the notes, right? So the quality control policies with respect to, see now the term is audit engagement, right? So it is decided by the engagement teams. And more specifically, the engagement partner is responsible for the quality control procedure of the particular audit engagement. So the engagement partner is responsible for the quality control procedure of the particular audit engagement, right? Now, let us try to understand the link between SC 220 and SQC 1. So, SC 220 is premised on the basis that firm is subject to SQC 1. See, firm is establishing policies and procedures in order to maintain the quality. So in order to maintain the system of quality control within the firm as required by SQC1. So since SQC1 is there that the firm has to follow, now based on that information which has been acquired by SQC1, engagement partner can apply SA 220. So SA 220 is premised on basis that firm is subject to SQC1, right? The engagement team is responsible for implementing the quality control procedure applicable to particular audit engagement and to provide the firm with relevant information that enable the functioning of firm's quality control relating to independence. So now the responsibility of engagement team or the engagement partner we will be discussing. So 220 is based on the premise, or it is on the it is premised on the basis that the firm is subject to SQC1, and it is the responsibility of the engagement team to implement the quality control procedures as applicable to particular audit engagement and to provide the firm with relevant information that enable the functioning of the firm's quality control relating to independence. Clear? So in terms of SA 220, the objective of the auditor is to implement quality control procedures at engagement level, so as that will provide the auditor. So there we used to write what? That will provide the firm a reasonable assurance. Remember that the audit is conducted as per the professional standards and regulatory and legal requirements, and that the audit report issued is appropriate in the circumstances. The same thing will come, but it should provide whom? The auditor, with the reasonable assurance that the audit is conducted in accordance with professional standards, regulatory and legal requirements, and that the audit report issued is appropriate in circumstances. So students, be smart learners. ठीक है, just keep in mind the concept that SQC firm के लिए applicable है, तो वहां पे we are using the term firm. SA 220 is more specifically with respect to responsibility of engagement partner, that you at particular audit engagement level. So reasonable assurance is same, but now at particular engagement level, and that the particular auditor or the engagement letter engagement partner. ठीक है? So SA 220 is modeled on the lines of SQC1. So it is based on SQC1, right? Now, what are the responsibilities of engagement partner with in order to maintain the quality for quality control for an audit of financial statement? So the matters are the same, the 6 matters. So wherever I have written in blue, this is the little change that is there. So with respect to the SQC1, whereby we were discussing about the quality control elements of quality control system of the firm. So the first point was leadership responsibilities for quality. It was within the firm. And now here in SA 220, it is leadership responsibility for quality on audits. Okay? So that was within the firm, it is on audits. Then relevant ethical requirement is the same. Acceptance, continuance of client relationships and audit engagement is the same. Then when we did SQC1, it was what? Human resource. Here it is assignment of engagement teams. And then engagement, performance, and monitoring, these are same, right? So these points that we are going to cover, these are very simple because the basis, the foundation we have studied in SQC1, and we have seen also that 220 is modeled on the same lines of SQC1, right? So the first is leadership quality for audit, or for quality on audits. So it says that this is what? Leadership quality. So leadership responsibility of engagement partner. So engagement partner should take the responsibility of overall quality of each audit engagement. So if you ask me, the key word here is what? Overall quality of each audit engagement. So engagement partner, overall quality, each audit engagement, right? His actions and appropriate messages to other members should emphasize on 2 things, right? If you remember, there it was what? Internal culture, the CEO and the managing partner. Then we did example, they should set example. And last point was operational personals. Remember, those were the 4 points. And here we are saying that the leadership responsibilities of the engagement partner is that he should take the responsibility for the overall quality of each engagement. And his actions and appropriate messages to members should emphasize on two things: importance of audit quality, of performing work that complies with professional standards, legal and regulatory requirements, complying with the firm's quality control policies and procedure, issuing the appropriate the audit report that is appropriate in the circumstances, the engagement team's ability to raise concern without fear of reprisals. Reprisals is what? The counter attacks, or you can say the results of their raising the concern, right? So without having any fear of what will happen if we raise this concern, right? So the engagement partner, through his actions, through his appropriate messages to other members of the team, he should emphasize on importance of audit quality, of performing work in compliance with. See, all these points are same what we have already covered. PS is what? Professional standards, regulatory and legal requirements, complying with firms' quality control policies and procedures, issuing the audit report that is appropriate in circumstances, and engagement team's ability to raise concern without fear of reprisals. And to emphasize on the fact, so the second point is to emphasize. So through the actions and appropriate message, the engagement partner is going to emphasize on the fact that quality is essential in performing audit engagement. Is it clear? Is it clear? So this is with respect to your leadership qualities, responsibilities, sorry. ठीक है? Is it clear? Simple है? Right? So be smart learners here. जहां पर something has been repeated, try to mark it and energize your efforts towards those things that are being repeated, like establishing the policies and procedures so as to obtain reasonable assurance. Then another thing that is repeated again and again is professional standards के हिसाब से है नहीं, regulatory legal requirements, and whether the audit report is appropriate in the circumstances. So you should you should learn these points, and these points should be on your fingertips, right? So these are the keywords that are going to help you fetch good marks and pass your audit exam with flying colors. So the next quality is with respect to relevant ethical requirements. So next element is relevant ethical requirements. So responsibility of engagement partner in relation to ethical requirement. So see, whatever you have understood there. So now here it will be the responsibility of engagement partner to identify the threat to independence with respect to particular audit engagement, which the safeguards may not be able to eliminate and reduce to an acceptable low level. Then reporting by the engagement partner to relevant persons within the firm to determine the appropriate action. So what can be the appropriate action? Either eliminating the activity or interest that creates threat by applying the safeguards, or withdrawing from the audit engagement if legally permitted. Tell me, is it easy? Quickly send in your replies. Are you finding this easy? Essay 220, I'm specifically asking you. Once we have done SQC 1. Like after doing SQC 1, I hope you are finding Essay 220 very easy. Send in your replies. So Om Krishna Gupta is saying yes. Sunil Gangadev is saying yes. Chalo, good. Okay. This was with respect to your ethical requirements. Then is what? Acceptance and continuance of client relationship, right? And audit engagement. So see, again, the responsibility of engagement partner is on lines with SQC 1. Why? See, SQC 1 requires the firm to obtain various information before it considers necessary, as it consider necessary. Remember these 3 points: before accepting an engagement with new client, before deciding whether to continue an existing client, when considering acceptance of new engagement with existing client. These are all the same. So SQC 1 requires the firm to obtain such information, right? And if you remember, then we saw that the information should be told to the employee, to the personnel also. So information relating to integrity of principal owners, information relating to competence of engagement team, necessary capabilities with respect to time and resources, compliance with relevant ethical requirements, significant matters that have arisen during current period audit and previous audit engagement and the implications. So all that information the firm is going to obtain in terms of SQC1. Now, this information is going to assist the engagement partner in determining whether conclusion reached with respect to acceptance and continuance of client relationship or the audit engagement, whether this is appropriate or not, right? So SQC1 has required the firm to obtain various information with respect to the integrity of the firm. Remember, competence of the integrity of the client owners, remember, in these three situations, right? Competence of the engagement team, the capabilities, compliance with relevant ethical requirements, and significant matters, right? Now, all these informations that the firm is required to obtain in terms of SQC1, based on this information, the engagement partner will determine whether the conclusions reached with respect to acceptance and continuance of client relationship or audit engagement, whether that is appropriate or not. Is it clear? Is it clear? The next point is assignment of engagement teams. There it was human resources. So it is very simple. With respect to assignment of engagement team, it should be ensured by engagement partner that the engagement team or any auditor's expert who is not the part of engagement team, they have appropriate competence, capability to perform this engagement according to professional standards, regulatory and legal requirements. Simple. Quickly tell me, is it easy? And then next is with respect to engagement performance. Now, here we have the responsibility of the engagement partner with respect to various things. So 5 things more specifically. Direction, supervision, and performance of audit engagement, whether it is according to professional standards, legal and regulatory requirements. Tell me, are the things getting repeated? So if you have devoted your time and energy towards learning these points, professional standards, these points, professional standards, regulatory and legal requirements, this is going to be very easy for you to learn SA 220 now, right? So with respect to engagement partner, the responsibility with respect to engagement performance is first is direction, supervision, performance of audit engagement according to professional standards, regulatory and legal requirements. Then to issue a report which is appropriate as per the circumstances. Simple. Then to review the audit documentation before the issue of the audit report. Simple. Then to ensure that sufficient appropriate audit evidence has been obtained to support the conclusion before the issuance of the audit report, and to ensure that undertaking an appropriate consultation, right, on difficult and contentious matter, whether within the team or outside the firm. Tell me, are you finding it all these points we have already covered now? Just now with respect to the engagement partner's responsibility, right? And with respect to the audit of listed entities and other audit engagement where the firms had determined that it is necessary to get what engagement quality control review done. With respect to that, the engagement partner shall first of all determine whether the engagement quality control reviewer has been appointed, discuss significant matter arising during the audit engagement, plus those identified by the engagement quality control reviewer. The auditor is going to discuss those matters with the engagement quality control reviewer, which have been identified during the engagement quality control review, right? And then not to date the audit report until the completion of the engagement quality control review. So this is reviewer, and whereby I have written ER, this is what reviewer, right? So the engagement partner shall determine that the engagement quality control reviewer have been appointed. he shall discuss the significant matters arising during the audit engagement, including those identified during the engagement quality control with whom the engagement quality control reviewer, and he shall not date the audit report until the completion of the engagement quality control review. And again, in case of difference of opinion within the team with those consulted or between the engagement partner and the EQCR, that is engagement quality control reviewer, the engagement team shall follow the forms, policies and procedure for dealing or resolving the difference of opinion. This also we have already covered. So this is with respect to engagement performance, whereby we have seen that there are 5 responsibilities on the engagement partner: direction, supervision, performance of audit engagement as per professional standards and regulatory and legal requirements. Then the responsibility for issuing the audit report that is appropriate in the circumstances, review of the audit documentation before issue of AR, ensuring that sufficient appropriate audit evidence has been obtained to support the conclusions for the issuance of the audit report, and to ensure undertaking the appropriate consultation on difficult or contentious matter within the team or outside the firm. Now, with respect to audit of financial statement of listed entities, we know that engagement quality control review is mandatory. For others also, where the firm has determined that they will get the engagement quality control review of that particular engagement done, with respect to all those, the engagement partner shall determine whether the engagement quality uh, control reviewer has been appointed. He'll discuss the significant matter arising during the audit engagement and those identified during the engagement quality control reviewer with the engagement quality control reviewer, and not to date the audit report until the completion of engagement quality control review. Right? In case of difference of opinion within the team or with those consulted or between the engagement partner and engagement quality control reviewer, the engagement team is going to follow the policies and procedures of the firm for dealing and resolving the difference of opinion. Simple. Is it easy? And the last point is monitoring. Now, the responsibility of the engagement partner with respect to monitoring. So if you are asked a question, you will be specifically asked that engagement partner ka responsibility kya hai monitoring ke liye. Now, there you are not supposed to write SQC1. There you will be writing what? Your SA 220. And if it has been asked for firm policies, then SQC1 reference will come. So monitoring, it says that students, we are on page number 11.34 of your module, if you just want to know the page number. So an effective system of quality control, it includes the monitoring process. Why? To obtain a reasonable assurance that the policies and procedure with respect to system of quality control is relevant, adequate, operating effectively. Remember, it is the same as we have done with SQC1. Now, the engagement partner should consider the results of firm's monitoring process as evidenced in the latest information circulated by firm and network firms. Tell me, where is this requirement for firm to communicate the latest information to the personnel? Tell me, where is it mentioned that the firm is required to give such information to the firm? Quickly send in your replies. Quickly send in your replies. Sunil Gangadev, Om Krishna Gupta, Sukaina, Shoaib, Swati. See, it is SQC1. So basically, I want you all to write that SQC1 mein there is responsibility on the form, right? So let me just share the screen. I think screen is not shared. Just a minute. Right. So it is given by SQC1, right? So the engagement partner shall consider the information, the results of the firm monitoring process as evidence in the latest information circulated by firm or the network firms, and whether any deficiencies are noted in that information that are going to affect audit engagement. The engagement partner is going to document the following matters with respect to the audit engagement. So what are those matters? The issues that were identified with respect to compliance with relevant ethical requirements, plus how they are resolved, right? the issues that are identified in compliance with relevant ethical requirements and how they are resolved, the conclusions that are reached on compliance with independence requirement, plus the relevant discussions with the firm that support these conclusions, right? The conclusions regarding the acceptance and continuance of client relationship and audit engagement, and the nature and scope of and conclusions resulting from consultations that were undertaken during the course of audit engagement. So, with respect to monitoring, right? With respect to monitoring, first of all, it says that the effective system of quality control, it includes monitoring process so as to obtain the reasonable assurance that the policies and procedures with respect to system of quality control are what relevant, adequate, and operating effectively. So now what is the responsibility on the part of the engagement partner? So the engagement partner consider the results of firm's monitoring process as evidence in the latest information circulated by the firm and the network firms, right? And he'll see whether deficiencies are noted in that information that are going to affect the audit engagement, and he's going to document the following matters. So first and foremost, the issues identified in the compliance of relevant ethical requirements and how they were resolved. The conclusions with respect to compliance with independence requirements plus relevant discussions within the firm that support these conclusions. The third point is also relating to conclusions, that is conclusions regarding to acceptance and continuance of client relationship and audit engagement. Students, any of you is unmute, I think. Please mute yourself. And the last point is nature and scope and conclusions resulting from consultations undertaken during the course of audit engagement. So if any consultations were taken, what was the nature, what were the scope and the results from all those consultations that were undertaken during the course of audit engagement, right? So this is with respect to monitoring process. You can always get a 4-mark straightforward question with respect to monitoring of what? The monitoring requirements of the engagement partner in terms of SA 220, right? So with this, we have covered SA 220 also. And first of all, quickly tell me, is it clear? Sunil, Gangadev, and who all are there? Krishna Gupta, Kavita, Shoaib, Swati. That's good. So students, we have covered today what? SQC 1 and SC 220. So we will do one thing. We'll take a break of 10 minutes here, and after the break, we will be discussing the case study and the past year question with respect to this chapter. And most importantly, we'll be also covering SS 710 on comparative information that we have left when we were doing chapter number 8, right? So let's take a quick break of 10 minutes here. And in the break, you can send in all your queries, whatever you have relating to the entire syllabus of auditing and ethics that we have done in our earlier sessions. So a quick break of 10 minutes here. So, students, I hope you all are back after the break. So, we have covered this chapter, but we are left with discussion of case study and few past year questions. So, quickly go through this case study, which is given on page number 11.35. See, Das and Company, a firms of auditor, is offered appointment as auditor of a company, a prospective new client. CA Sukanya, one of the partners, is dealing with new client. While meeting with officers of the company, she comes to know that Sushant, CFO of the company, was her classmate. In fact, both of them had started CA together. However, Sushant has left CA midway due to repeated failures and tried his luck to pursue an MBA finance from one of the leading institutions. During the initial discussion, it transpires that company is going to launch new series of in the field of weather forecasting. Such series services would be available on website of company and micro weather information would be available on payment of charges. The company requests audit firm to be visibly associated with their marketing bids. Assume that firm chooses to accept the offer and writes to previous auditor Walker and Company to advise whether there exist any professional reasons for them not to accept the proposed offer. However, Walker and Company do not reply to the request of Das and Company. During preliminary discussion, it also became known that the said company has acquired all shares of another company. Under relevant provisions of law, financial statements of both companies needed to be consolidated and audited. Despite this knowledge, Das and Company failed to advise their client regarding audit of consolidated financial statement. The company also offers auditors contract for providing IT services pertaining to information system of company. Considering discussion about Sukanya and Sushant, which of the following statements seems most appropriate? So it says most appropriate. The above discussion is irrelevant in context of proposed offer. The proposed offer should be accepted by firm. The engagement team may be headed by C. Sukanya for better coordination and results. The proposed offer should be accepted by firm. The engagement team may be headed by a different partner of the firm. The matter is too trivial to be reported by CA Sukanya to other partners of the firm. So, Om Krishna Gupta has answered it correctly. Others also please reply. Sunil Gangadev, Shoaib, Swati, who all are there? Sukaina. So Swati, correct. So see, it says as per the discussion. So what was the discussion? So it says that during the initial discussion, it transpires that, and both of them, in fact, both of them started their CA together and Sushant has left CA midway, right? So it says that the above discussion is irrelevant in the context of proposed offer. The proposed offer should be accepted by firm. The engagement team may be headed by Sukanya for better coordination and results. The proposed offer should be accepted by firm. The engagement team may be headed by a different partner. And the matter is too trivial to be reported. So see, it says which is the most appropriate. So it is the C answer. The proposed offer should be accepted by firm. The engagement team may be headed by a different partner of the firm. Now, above A point, the above discussion is irrelevant. This is not appearing to be appropriate, right? The proposed offer should be accepted by the firm and the engagement team may be headed by CA Sukanya for better coordination and results. So it does not, basically it means that since she knows Sushant, so for better coordination results, she should be considered as the engagement partner, which is not appropriate. And last point says the matter is too trivial to be reported by CA Sukanya. So this is also not appropriate. So the proposed offer should be accepted. However, the engagement team may be headed by a different partner of the firm. Keeping in view request of the company to be visibly associated with company's new services, identify which type of threat is being faced by audit firm. Self-interest threat, familiarity threat, self-review threat, and advocacy threat. Quickly send in your replies. Quickly. So it is not self-interest, it is not familiarity, it is not self-review, it is the advocacy threat. Why? Because see, what has been asked that the company requests auditor to be visibly associated with their marketing bids, that is promoting the client organization, right? So it will be advocacy threat. Shoaib, Om Krishna Gupta, you are correct. Others, please check your answer. सी सेल्फ रिव्यू का तो यहाँ है ही नहीं ना. सम like one of the student has mentioned self review threat. So as such the firm is not reviewing its own work, right? And self interest is also not there, familiarity is also not there, advocacy, that is promoting the client organization. Is it clear? Okay. Then the third point. The previous auditor, Walker and Company, have not replied to communication of Das and Company. What fundamental principle of professional ethics is not being followed by them? So is it objectivity? Is it professional behavior? Is it professional competence in due care? Or is it integrity? Simple. Shoaib, Swati, correct. Others also please reply. Om Krishna Gupta, correct. See, it is not objectivity. It is professional behavior. It is not professional competence in due care. It is not integrity. It is what? Professional behavior. So the answer is B. Das and Company have failed to advise the company regarding audit of consolidated financial statement. Which fundamental principle of professional ethics is being violated? Is it professional behavior, integrity, objectivity, or professional competence and due care? So Shoaib, Swati, correct. Others, Om Krishna Gupta, correct. So see, they have failed to advise the company that accounts will be consolidated, right? So this is what? Professional competence and due care. One of the fundamental principle of professional ethics which has been violated, right? Then which of the following statement is most appropriate regarding providing offer of work of IT services by auditors to the company? So what was the statement? So it says the company also offers auditors contract for providing IT services pertaining to information system of the company. So it will be such offer may create self-review threat, advocacy threat. It does not constitute any threat, or it may create self-review or advocacy threat. Quickly send in your replies. Om Krishna Gupta, Shoaib, correct. Others also please reply. So see, advocacy is promoting the client organization, but it is not the case, right? And threat is there. So B and C are not correct. And since D says self-review and advocacy, these are also not correct. So the answer is what? A, that is such offer may create a self-review threat. Is it clear? Quickly have a look at these MCQs also. Quickly, I need answers. Identify the most appropriate statement. SC 220 applies at the level of firm. SQC 1 is premised on the basis that firm is subject to 220. SC 220 is premised on the basis that firm is subject to SQC 1, and SC 220 applies to all the engagement. Read it carefully. It is really very, very simple. Please reply. See, SC 220 applies at the level of firm. This is not correct, right? Because it applies for engagement level, and that too, the engagement team or engagement partner. SQC 1 is premised on the basis that firm is subject to 220. No, SC 220 is premised on the basis that firm is subjected to SQC 1, right? Then D says SQC 220 applies to all the engagement, which is not correct because it applies to audit engagements also. So the answer is what? C. SC 220 is premised on the basis that the firm is subject to SQC 1. Okay? Professional skepticism includes overlooking unusual circumstances, using inappropriate assumptions, In determining an extent of audit procedures, overgeneralizing when drawing conclusions from audit observation, or being vigilant to conditions that might indicate possibilities of fraud. Vicky, send in your replies. So let me see who all have answered. So with respect to second, Om Krishna Gupta, Swati, you both are correct. Others also, Kavita, please reply. Sunil Gangadev, Shoaib, please reply. So see, overlooking unusual circumstances, this is not in the case of professional skepticism. Using inappropriate assumption is not the case of professional skepticism. Overgeneralizing when drawing conclusion is not the case of professional skepticism. But professional skepticism is what? Keeping a questioning mind, being alert to situations. So being vigilant is again alert to conditions that might indicate possibilities of fraud. So the answer is D. Third question, which of the following is not a fundamental principle governing professional ethics? Is it professional competence and due care? It is integrity, objectivity, or safeguards to independence? So very easy. So the answer is D, that is safeguards to independence, right? So which of the following is not necessary to establish preconditions for an audit? Acceptability of FRF, acknowledgement of cooperation from management in deciding audit procedures, acknowledgement from management of providing access to persons within the company, acknowledgement of management in understanding its responsibility for preparation of financial statements. So see, acceptance of acceptability of FRF, that is a precondition. Acknowledgement of cooperation from management in deciding audit procedures. See, audit procedures are to be decided by the auditor himself and the audit team. So this is not the case. Then acknowledgement from management of providing access to persons within the company. This is a precondition. Acknowledgement of management in understanding its responsibility for preparation of financial statements. Again, this is a precondition. So the answer to this is B. That is acknowledgement of cooperation from management in deciding the audit procedure. And the last one, identify the most appropriate statement in context of SQC1. So students, as I always say, you have to read the question also carefully, apart from the options that are given. It says most appropriate, right? Assembly of engagement file should be completed in not more than 60 days after the date of auditor's report in case of audit engagements. Second, engagement file should be completed before date of auditor's report in case of audit engagements. C. Engagement file should be completed in not more than 60 days after date of an engagement. And D. Engagement file should be completed on date on which the audit report is signed in case of audit engagements. Send in your replies with respect to fifth. Om Krishna Gupta, Swati have answered fifth question correctly. So identify the most appropriate in context of SQC1. So assembly of engagement file should be completed in not more than 60 days after the date of the auditor's report in case of audit engagement, which is the correct option. See, B says engagement file should be completed before the date of auditor's report. So this is not the correct option. Read the D point now. Engagement file should be completed on date of audit report, on the date on which audit report is signed, which is not correct. Now, C point. Engagement file should be completed in not more than 60 days after completion of engagement. So don't get confused. 60 days are after the date of auditor's report. Right? Is it clear? Is it clear? Okay. Now let us just do a past year question. So read this question. ABC and Associates, an audit firm. So this is one of the past year question, has been approached by a prospective company client that has been in business for about 10 years to conduct an audit of its financial statements. Before accepting the audit engagement, the firm wants to access the integrity of prospective client. Firm wants to access the integrity. ठीक है? So just a minute. integrity, right? And the firm, it says firm. With regard to assessment of integrity, which matter should be considered by the audit firm? So tell me, you will be talking about SQC 1 here or SA 220? Yes, it will be SQC 1 and the answer is given on page number 11.28. ठीक है? So, just a minute. Swati correct, Shoaib correct, Om Krishna Gupta correct. So with regard to integrity of the client, matters that ABC and Associates should consider include, for example, identity and business reputation of the client's principal owners, key management related parties, and those charged with governance. Nature of client's operation, including business practices. Information concerning the attitude of all these people, clients, principal owners, key management, and those charged with governance. Hana? It is the same only towards such matters as aggressive interpretation of accounting standards and internal control environment, where the client is aggressively concerned with maintaining the firm's fees as low as possible. Indications of an inappropriate limitation on the scope of work, indications that the client might be involved in the money laundering and other criminal activities. And the last point is not mentioned here, but it will be the reasons for the, let me just show you it to you from the model. The reasons for the proposed appointment of the firm and not reappointing the previous firm. So here, this, right? Is it clear? So students, with this, we have finished. So with this, we have finished our chapter number 11, that is ethics and terms of audit engagement. But we have important topics to cover. That is, we will be covering essay 710 now. I'll be taking up all your queries. So let me just share the file. Chapter number 8, essay 710. Just a minute. See, the name of this essay is Comparative Information, Corresponding Figures, and Comparative Financial Statements. So this was a topic left, which is a part of your chapter number 8, audit report. And the page number, I'll just tell you, the page number is 8.57, right? So see students, this topic contains the auditor's responsibility with respect to comparative information, and essay 710, sorry, essay 710, comparative information, corresponding figures, and comparative financial statements. So essay 710, it deals with auditor's responsibility with respect to comparative information. And see, comparative information can be of two types, which depends upon the applicable FRF. So whatever is the applicable, the FRF that is applicable, so the type of comparative information will depend upon that, right? So comparative information can be either corresponding figures or comparative financial statements. So first of all, let us try to understand these three terms. So comparative information. Comparative information means the amounts and disclosures included in the financial statement in respect to one or more prior periods as per the applicable FRF. So as per the applicable FRF, either it can be corresponding or it can be comparative financial statements. But comparative information क्या होता है? It is amounts or disclosures included in the financial statement in respect of one or more prior period as per the applicable FRF, right? Now let us see the two types of comparative information, which is what? Your corresponding figures and comparative financial statement. So what is meant by corresponding figures? So it is the amounts and disclosures relating to the prior period that are included as an integral part of the current period financial statement, but these are intended to be read only in relation to the amounts of the current period. So the amounts and disclosures of the prior period is given, but why are they given? They are given to be read only in relation to the amounts and other disclosures of the current period. So as such, the auditor's opinion shall not refer to the corresponding figure except in various cases that we are going to discuss. So this is about your corresponding figures. Now let us have a look at the definition of the term comparative financial statements. So comparative financial statements, it means that the amounts and disclosures of prior period are included, and if these are audited, these will be referred in the auditor's opinion. So where the amounts and disclosures for the prior period are included for comparison in the financial statement. When we did corresponding figures ka definition, we saw that the amounts and disclosures are included, but to be read only in connection with the current period financial statement. But here it is mentioned in comparison with the financial statements of the current period, and the auditor's opinion will refer to each period, which is the with respect to which the information is given, right? But corresponding figures may it will not refer to each period except in various cases that we are going to discuss. So just try to understand that this essay 710, first of all, it discusses what? The comparative information, right? And then we have seen that comparative information can be either corresponding figures or comparative financial statement based on the applicable FRF, right? Now, in order to understand essay 710, just try to understand that first of all, we'll be discussing what are the various audit procedures that the auditor has to perform with respect to comparative information, be it corresponding figures or be it comparative financial statement. And then the reporting part with respect to with respect to corresponding figures and comparative financial statement, that is going to be different, that we are going to discuss, right? So SS 710, it deals with the auditor's responsibility of comparative information. And if the prior period financial statement were audited by predecessor auditor or they were not audited, I hope you haven't seen the relevant essay number. Quickly tell me the essay number. If the prior period financial statement were not audited or they were audited by predecessor auditor, that is, what is the essay number? That is, it is an initial audit engagement. So I have got correct answers from Shoaib and Swati, initial audit engagement. Opening balances. This is the complete name, Swati. See, Shoaib, whatever is the content given in your module, you are supposed to write that. Okay? So, essay 510. So, where is the sheet? Initial audit engagement opening balances. So, it says, so there the auditor has to consider essay 510 also, right? So nature of comparative information, we have seen it depends upon the applicable FRF. It can be corresponding figures where the auditor's opinion refers to current period only except for few cases, and comparative financial statement where the auditor's opinion refer to each period, right? So what is the objective of the auditor? To obtain sufficient appropriate audit evidence. So abhi we are saying about comparative information, be it corresponding figure or be it comparative financial statement. And I have mentioned CI wherever comparative information is to be used, right? So comparative information is the information with respect to the prior period. Now, what are the audit procedures with respect to comparative financial information? So CI, comparative information, what is the audit procedure? These are the common audit procedure, whether it is corresponding figures or whether it is comparative financial statement. Clear hai itna? Quickly tell me, is it clear? So the basic, you can say flow of the essay, is it clear? ठीक है, ठीक है। तो देखो, what are the audit procedures? So the auditor, uh, with respect to the comparative financial information, so the auditor shall determine whether the comparative financial information is as per the applicable FRF. तो corresponding figures की तरह आया है या comparative financial statements की जैसे आया है. So auditor will see whether the same is as per the applicable FRF and whether the same is appropriately classified. Simple. The comparative information should agree with the amounts or disclosure of the prior period and the accounting policies, whether these are consistent and the changes, if any, are properly accounted for, prescribed, and disclosed in the financial statement. Simple. While performing the current period audit, the auditor might become aware of the possible misstatement in the comparative information. So, during the conduct of audit of the current period, auditor might come across certain information that there is possible misstatement in the comparatives. This is comparative information. Okay. So if such is the case, auditor is going to perform additional audit procedure and he's going to obtain sufficient appropriate audit evidence as to whether the material misstatement exists. Further, see if auditor was the auditor of the last year. So all this information must have been considered in SA 560 subsequent events. So auditor will consider that. And with respect to all the comparative information, auditor is going to obtain written representation for all period referred to in the opinion. And auditor may also obtain specific written representation for any prior period item which is disclosed separately in the current period P&L. So these are, as I told you, that common audit procedure for both type of comparative information, that is corresponding figures or comparative financial information. Simple hai na? So if the information of earlier periods, amounts or disclosure of earlier periods is mentioned, then whether it is as per applicable FRF, whether appropriately classified hai nahi, the amounts and disclosure, they agree with the prior period financial statements. Accounting policy should be consistently applied. In case of any change, the same should be properly accounted for, disclosed. While performing the current period audit, if auditor becomes aware of any possible misstatement in the comparative information, he'll perform additional audit procedure to obtain sufficient appropriate audit evidence as to whether material misstatement exists. And where he was the auditor of the prior period financial statement, SA 560 he has to follow, and as per SA 580 he'll obtain written representation with respect to all the period referred in the opinion, and he may obtain specific written representation for any prior period item disclosed separately in the current period financial current period P&L. Is it clear? Yes, Shoaib. The comparative information can be either corresponding figures, in the way of corresponding figures, where the information of the prior period is given only to be read along with the figures of the current year, and the auditor as such is not going to give his opinion on the corresponding figure except in various situations that will be considered. Or comparative financial information can be what? Comparative financial statements, where the information of the prior period is given for comparison with the current year, and the information with respect to any year that is given, the auditor is going to refer to each period in his audit report. Is it clear, Shoaib? And whatever you have written is also correct. Okay? Now, with respect to reporting, so there is a difference of reporting that we are going to discuss with respect to corresponding figures. So first and foremost, the thumb rule is that with respect to corresponding figures, see, corresponding figures are given only with the intention of what? That they need to be read with the financials of the current period. So as such, no other purpose is there of giving such information. So auditor shall not refer to corresponding figures except. Now there are few situations. I think there are 4 situations. We are going to discuss them one by one. Okay? So the first point says that the where the prior period account audit report where the prior period audit report was modified, be it qualified, be it adverse, or be it a disclaimer, and the matter is still unresolved. See, as such, the information is given only to be read, right? But if the prior period audit report was modified, be it qualified, adverse, or disclaimer of opinion, and the matter is still unresolved, so the auditor is going to modify the current period's audit opinion. Why? Because you all know that opening is plays an important role in calculating the closing. So if the prior period modification is still there, it is still unresolved, auditor is going to modify the current period's audit opinion. And in the basis of opinion paragraph, auditor is going to mention, just a minute. It is not coming in this. Just a minute. In the basis of opinion paragraph, auditor is going to mention, give the basis of such modification. Let me just take you to the module for that. So we were discussing this point. Just give me a minute. So this is chapter number 8. See, if the prior period the prior period audit report was modified, right? The auditor is going to modify the current period audit report also, right? And in the basis of opinion paragraph, the auditor is going to refer to the current period figures and the corresponding figures in the description of the matter giving rise to the modification when the effects or possible effects of the matter on the current period figures are material. So he's going to refer the current period figures as well as the corresponding figures, right? Whereby he is giving the description of the matter. So for example, with respect to depreciation, there is some depreciation is the matter because of which there has been a modification. So the current period figure as well as the corresponding figure of the earlier year, he is going to mention where the effect or the possible effect of that matter on the current period figure is material, right? And in other cases, he is going to explain that the audit opinion has been modified because of the effect or possible effects of unresolved matter on the comparability of the current period's figures and corresponding figures. So he is going to mention that it is because of the effect or possible effect. Why? Because let's say his disclaimer of opinion is there. So possible effect of the unresolved matter on the comparability of the current period figures and the corresponding figures. So basis of opinion paragraph he is going to give the basis. Then, so this was the case where the auditor's opinion was modified in the previous year and the matter is still unresolved. Now comes a situation where the auditor has obtained a sufficient appropriate audit evidence that a material misstatement exists in the prior period financial statement. Though the prior period audit report is unmodified, but auditor has obtained a sufficient appropriate audit evidence that there is a misstatement, right? So auditor will verify whether the misstatement dealt with in the financial statement as per the applicable FRF. If no, then auditor is going to modify the current period audit opinion and he'll be mentioning that it is modified with respect to corresponding figures included in the financial statements, right? So the first case was the case whereby the prior period audit reports was modified, but the matter is still unresolved. So he is going to modify the current period opinion. The second case is just the opposite, that the prior period audit report is as such unmodified, But auditor, while conducting his audit of the current year, he obtains a sufficient appropriate audit evidence that a material misstatement exists in prior period financial statement. So first of all, he'll see whether that matter has been dealt with as per the applicable FRF. If no, then he'll modify the current period's audit opinion and he'll modify it with respect to the corresponding figures that have been included in the financial statement, right? Then the third, prior period financial statements were not audited. So in the above two cases, they were audited, but एक में modified opinion था, एक में unmodified opinion था. Unmodified opinion along with auditor obtaining sufficient appropriate audit evidence that material misstatement is there, right? Now the next point says that prior period financial statement, they were not audited, right? So here comes the role of other matter paragraph. Quickly tell me the essay number, other matter paragraph के लिए. Quickly send in your replies. Quickly send in your replies. Om Krishna Gupta, correct. Swati, correct. Others also please reply. Shoaib, Kavita, Sunil Gangadev, please reply, students. All of you should reply. Shoaib, correct. So Om Krishna Gupta, Swati, Shoaib, correct. Essay 706. So it says if the prior period financial statements were not audited. So in the other matter paragraph, he is going to mention this fact, but it will not relieve the auditor from obtaining sufficient appropriate audit evidence. Clear? Now, the fourth point, that the prior period financial statement were audited by predecessor auditor. And if the auditor is also permitted, so if the prior period financial statement were audited by predecessor auditor, plus the auditor who is conducting the audit of current year, he is permitted by law regulation to refer to predecessor auditor's report on corresponding figure, and he decides to do so. So the prior period financial statements are audited and he decides that, okay, I'm going to give a mention of the predecessor auditor. So in the other matter paragraph, he is going to mention what? Three things. He shall state in the other matter paragraph, the financial statement of prior period were audited by the predecessor auditor. Second, the type of opinion that has been expressed by predecessor auditor, if the same is modified, what were the reasons and the date of that report. Simple. Simple. So with respect to corresponding figures, we have done 4 cases, whereby we saw that the first is that the auditor's opinion, for the thumb rule is auditor's opinion shall not refer to corresponding figures except for these 4 cases. So prior period audit report was modified, be it qualified, adverse, or disclaimer, and the matter is still unresolved. So auditor is going to modify the current period audit opinion, and in the basis of modified opinion, he is going to mention the current year figure and the corresponding year figure of the matter that has led to such modification, and that because of the significance of the matter or the possible effect of that matter, the same has been modified, right? Secondly, where the prior period financial statements were audited, but the audit report was unmodified. However, during the course of audit, auditor has obtained sufficient appropriate audit evidence that a material misstatement exists in the prior period financial statement. So, first of all, he'll verify whether the same has been dealt with in the applicable, as per applicable FRF in the financial statement. If no, then he's going to modify the current period audit opinion, and he's going to mention that it is modified with respect to the corresponding figures, right? Then the 2 cases are where the prior period financial statement was not audited or where it was audited by predecessor auditor. So if the same was not audited, he's going to mention that fact in the other matter paragraph, but that is not going to relieve the auditor from obtaining sufficient appropriate audit evidence. If it has been audited by predecessor auditor and the auditor in question, he's been permitted by law and regulation to refer to do so, then he shall state 3 things, that is financial statement for prior period, these were audited by predecessor auditor, the type of opinion and the reasons in case it is modified, and the date of that report. This was with respect to corresponding figures का reporting. So अभी तक हमने क्या किया है इसे 710 में? First of all, the name is what? Comparative information. Just a minute. Corresponding figures and comparative financial. What is meant by comparative information? Then we saw that comparative information can be corresponding figures or comparative financial statement as per the applicable FRF. Then we saw what is meant by comparative corresponding figures and comparative financial statement. Then we saw a common audit procedure with respect to the comparative information, and then the specific reporting with respect to corresponding figures. Tell me, is it clear? I hope everything is clear, because see, with respect to SA 710, students do get confused. So that is why I'm revising as to what we have done in this essay. So please tell me, is it clear? ठीक है. Now comparative financial statement. So comparative financial statement क्या होता है? That do you all know that the amounts and disclosures for the prior period are included for. So there is a purpose कि comparison के लिए that has been given. So if it has been given purposefully, that is for comparison. So auditor is going to refer to each of the period if the same is audited, right? So the level of information included in those comparative financial statement is comparable with that of the financial statement of the current period. So each and everything of the earlier year, every information is given. So the thumb rule is that the auditor is going to refer to each period in his auditor's opinion, right? Now, again, there are, let me just see, there are three cases. There are three cases which are given. So first is auditor's opinion on prior period is different from previously expressed opinion. So let's say if it was modified, but given by the prior period auditor, but now the auditor thinks it should be what? Unmodified. So if the auditor's opinion on prior period is different from previously expressed opinion, so auditor is going to disclose the substantive reason for different opinion in other matter paragraph in terms of SA 706. See, if there is a difference of the opinion, it is going to be important reason. So that is why substantive reason. Clear? Clear? Then if the prior period financial statement were audited by predecessor, so everything is going to be the same. That is, auditor, first of all, he is going to express his opinion on the current period's financial statement. Then he is going to mention in the other matter paragraph that the financial statements of the prior period have been audited by predecessor auditor, the type of opinion that has been given, and the reasons for modification and the date of report, right? If the predecessor audit report was unmodified and the auditor concludes that there is a material misstatement that exists, he will communicate with those charged with governance and request that predecessor auditor be informed. If such is the case, that unmodified opinion hai, but he concludes that material misstatement exists. So first of all, he'll communicate with those charged with governance and request that the predecessor auditor be informed. If prior period financial statements are amended and the predecessor auditor issues a new audit report, then auditor is going to report on the current period financial statement only. Because prior period ka to financial statement bhi amend ho gaya and the predecessor auditor also agreed. So he's going to report on the current period financial statement only. And the last is when the prior period financial statements are not audited. So again, he will state in the other matter paragraph this fact that the prior period financial statements are not audited, but it does not relieve the auditor from obtaining sufficient appropriate audit evidence with respect to the opening balances that they do not contain material misstatement affecting the current period financial statement. So this was with respect to SA 710. Comparative information, corresponding figures, and comparative financial statement. Tell me, is it clear? And then Swati, I think it was your doubt. I'll be taking up that doubt also. Tell me, is it clear? So let us just quickly have a look at this essay from your module also. So this is given on page number 8.57 of your module. So standard on auditing SA 710 comparative information, which can be corresponding figures and comparative financial statements. So the standard deals with auditor's responsibility regarding the comparative information. Just a minute. Comparative information in an audit of financial statements. When the financial statements of prior period have been audited by predecessor auditor or were not audited, auditor, the requirements and guidance of SA 510, that is initial audit engagement opening balances, that will also apply. So what is meant by comparative information? So it depends upon the applicable FRF, and there can be two broad ways, that is corresponding figures and the comparative financial statements, right? So the approach to be adopted is specified in the terms of audit engagement also. So what is the difference? So just this is the main gist. So for corresponding figures, the auditor's opinion on financial statement refers to current period only, whereas for comparative financial information, the auditor opinion refer to each period for which financial statements were presented, right? What are the objectives? To obtain sufficient appropriate audit evidence that the comparative information is prepared in all material respect as is required as per FRF, and to report accordingly. What is meant by comparative information? So amounts and disclosures in the financial statement in respect of one or more of the prior periods as per the applicable FRF. So the applicable FRF will determine whether it is corresponding figures or whether it is comparative financial information. So what is the audit? What are the audit procedures? So first of all, he'll see whether he'll determine, the auditor shall determine whether the comparative information is as per the applicable FRF, whether the same is appropriately classified or not. And he'll see that whether the comparative information agree with the disclosures that are given in the prior period. And then the accounting policies. So iske liye to you all know that whether the accounting policies are consistently applied from year to year basis, and if any changes have been there, the same should have been properly accounted for and presented and disclosed, right? Now, if while conducting the audit of the current period, auditor becomes aware that there is a possibility of material misstatement in the comparative information, then he'll perform what? Additional audit procedures in order to obtain sufficient appropriate audit evidence that whether a material misstatement exists. And in case he was the auditor earlier year, SA 560, that is subsequent events. And SA 580, that is he'll obtain written representation with respect to all the periods that are referred to in the auditor's opinion, plus he may obtain specific written representation with respect to any PPI, whether the same has been disclosed in the current period financial statements, PNL. This was with respect to the audit procedure. Now, with respect to the reporting, we have seen 4 points with respect to corresponding figures, and then 3 points with respect to your comparative financial statement. So if the auditor's report on the prior period as previously issued included a modified opinion, that is qualified disclaimer or the adverse opinion, and the matter is still unresolved, right? So auditor is going to give he shall modify the current period financial statement, the audit opinion on current period financial statement, and in the basis of modification paragraph, he is going to mention the corresponding figures along with the current period figures, and when the effects or the possible effects are what? Material. Or in other case, he's going to explain the audit opinion has been modified because of effects or possible effects. So that is where it is not possible to give the figures. He's going to mention that the possible effect or the effect of the unresolved matter on the comparability of current period figures and the corresponding figures. The second situation is what? Where unmodified opinion was given, but auditor has obtained sufficient appropriate audit evidence that a material misstatement exists, right? So in this case, auditor is going to qualify the opinion of the current year modified with respect to the corresponding figures, right? Now, if the prior period were not audited, he is going to mention this in the other matter paragraph, though that the corresponding figures are unaudited, but such statement does not, however, it does not relieve the auditor from the requirement to obtain sufficient appropriate audit evidence that opening balance do not contain misstatement that materially affect the current period financial statement. And if the prior period financial statement were audited by predecessor auditor and is permitted by law and regulation to refer to the predecessor auditor's report on the corresponding figure, and if he decides to do so, then he'll mention 3 facts that the financial statements were of prior period were audited by predecessor. This was the opinion. If there was modification, the reasons and the date, right? Comparative financial statement, basically the amounts and disclosures are specifically given for the purpose of comparison of financial statements of the current period, right? And if they are audited, they will be referred to in the auditor's opinion, right? So first of all, auditor's opinion will refer to each period. So when the reporting on prior period financial statement is is with reference to the current period audit, and the auditor's opinion is different from the previously given opinion, he is going to mention that in the other matter paragraph as is given as per the requirements of FSC 706. If the financial statement were audited by predecessor, other matter paragraph he is going to mention. And if the financial statement of the prior period were not audited, again other matter paragraph, but that is not going to relieve him from his requirement to obtain sufficient appropriate audit evidence that opening balances do not contain a misstatement that materially affect the current period's financial statement. So students, is it clear? SA 710. And now with this, we have covered each and every topic of all 11 chapters of your module. Of the auditing and ethics subject, we have covered each and every topic. We haven't left any topic. We have revised all the topics, and in fact, many of the topics we have revised in the session twice also, right? So first of all, tell me, SA 710, is it clear to all of you? Quickly send in your replies. Shoaib, Om Krishna Gupta, Swati, Sunil Gangadek, Kavita, please send in your replies. Okay. Now tell me whether your understanding of all 11 chapters is clear. Swati, I'll be just taking up your doubt. Meanwhile, I'll just share the required file. Students, please reply. So Swati has asked me to discuss chapter number 10 ka standard and substandard assets. So meanwhile, students, please reply. We have not left even a single topic, a single paragraph in your module. We have revised each and everything, right? And students, by tomorrow, you will get all the left assignments with respect to your past year questions with respect to the chapters that are left to be uploaded. Tomorrow, by tomorrow, you will get all those sheets. So, Swati, standard and substandard, you were saying. Students, please reply meanwhile. So, see, see, with respect to the classification of the advances, so non-performing, Swati has asked me to discuss substandard assets, I think, right? So what are NPA? I'm assuming that is clear, Swati, right? Now, the asset that has remained NPA for a period of less than or equal to 12 months, that becomes substandard asset. Standard asset is what? Whereby the installment and the principal, the installment of the principal and the interest, they are coming regularly. So no provision is to be made with respect to those assets. Substandard is the one which has remained NPA for a period of less than or equal to 12 months, right? And with respect to that substandard, why is it now substandard? Because it has remained NPA for a period of less than or equal to 12 months. So provision is to be created of 15%, right? And the asset which has remained in the substandard category for a period of 12 months, now it shifts to the category of what? Doubtful assets. And under the head doubtful assets, there are three subcategories, that is doubtful up to 1 year, doubtful 1 to 3 years, and doubtful for more than 3 years. So the provisioning is like with respect to the unsecured portion of the advance, 100% provision is to be created. And with respect to the secured portion, doubtful up to 1 year, it will be 25%. Doubtful from 1 to 3 years, it will be 40%. And doubtful for more than 3 years, it will be what? 100%. And loss asset is the one that has been identified by the bank or internal external auditors or the RBI inspection as loss, but the amount has not been written off wholly. So while inspection, it has been seen that nothing is going to come from this asset now. So 100% provision shall be created with respect to that asset. Standard is what? Whereby the bank is getting the payment. So standard loans can be standard regular or the special mention account. So we have discussed a question with respect to special mention accounts also. So for any advance to be considered as NPA, 90 days must have passed, right? Now, in fact, more than 90 days. So special mention accounts will be what? SMA 0 category, SMA 1 category, and SMA 2 category. Why? There are indicators that they can become NPA, but as such, they have not become overdue for more than 90 days, right? So they show the stress signals. So SMA 0 is where the accounts are showing stress signals. SMA 1 is which are overdue between 31 to 60 days, and SMA 2 is which are overdue between 60 to 90 days. And we have discussed a test your understanding question, the answer to which is given at the last of your at the end of the session. So I hope Swati, is it clear now? Is it clear? So Shoaib is asking for chapter number 6. Just give me a moment. So Shoaib has asked for chapter number 6, audit documentation. So Swati is saying it is clear. So what is your doubt, Shoaib? Let me just have a look first. Others also, please send in your queries, if any, relating to all the 11 chapters. So let me just open the concern file. Okay, we did this topic from the module itself. The topic is on page number 6.10. See, so what is the doubt? Let me just read the doubt again. See, it says that with respect to documentation, the documentation of significant matters is to be maintained. So Shoaib has asked me query with respect to significant matters. What can be the significant matters? So see, when the auditor has to see whether a matter is significant or not, he will do an objective analysis of the facts and circumstances. He'll apply his professional judgment in order to see whether a matter is significant or not, right? Certain examples whereby the matters are significant, these can be the matters which give rise to significant risk, right? Right. When the results of the audit procedure says that the financial statement could be materially misstated, or where there is a need to revise the auditor's previous assessment of risk of material misstatement as and the auditor's responses to those risks, right? Auditor is not able to do that. He will document that these are the circumstances. So if he is not able to attend the physical inventory count, he'll document that, right? And the last point says that if any finding during the course of audit is there because of which there is modification to the audit opinion, or which has lead to the emphasis of matter paragraph, obviously the auditor is going to document that. And all these are what? Significant matters. Now, the form, content, and extent of the audit documentation of these significant matters, it depends upon auditor's professional judgment that he has exercised in performing the work and evaluating the results. Right? Is it clear? Shoaib, is it clear? Is it clear? Students, please send in your replies. I'm waiting for your more doubts. Yes, Swati. Swati saying, ma'am, while assembling, can we discard the superseded documents? Yes. So you can always get a case study based question on this. So let me just show it to you. Just a minute. So see, after the assembly of the audit file has been completed, the audit, not this, just a minute. See here. The auditor need not include the superseded. So basically it means, suppose you are doing some depreciation calculations. You did some calculation, you found it was not correct, you again did some calculation. So the preliminary working or the previous copies of the corrected or papers for, let's say, for typographical errors. So these you will not keep as documentation in order to avoid any confusion. So the auditor need not include in audit documentation superseded drafts of working papers and financial statement, notes that reflect incomplete or preliminary thinking, previous copies of documents corrected for typographical or other errors, and duplicates of documents. And see, I marked it as important. You can always get a case study based question on this, right? Then whose doubt was it? Whose doubt was it? Swati is saying it is clear. Sukanya, which analytical procedures? Please mention the page number. Analytical procedure, which topic you are saying? So please, Sukanya mention. So Sukaina has asked a doubt on page number 10.21. So let me just open the concern file. So page number 10.21. So see, and Sukanya, please mention the page of the analytical procedures topic that you are saying. So see, this is with respect to the basal requirement. So it basically says that, so this was the topic that we were doing as what? As the conducting an audit, right? So conducting an audit, may it involves what? The 17 point is Basel 3 framework. So basically, the Basel Committee on Banking Supervision and Financial Stability Board. So as per the subprime crisis of 2007 and 2008, so in order to make the banks resilient, that is strong, right? So that is why certain minimum set of criteria was included to be included in the new definition of the regulatory capital of the bank. that they are required to keep. So certain new criteria was included that these instruments will be included in the minimum regulatory capital that the banks are required to make. Why? As a response to the subprime crisis that happened in 2007 and 8, so as to make banks, so it is mentioned resilient, that is strong. So a strong bank and banking system. So this is the Basel III framework. And others also please reply in case any doubt is there. So Sukaina, you are asking for chapter number 4. Page number. So let me just open the relevant sheet. Is this doubt clear? So this is the topic of analytical procedures. So basically it says that when the auditor is conducting the detailed analysis with respect to, let's say he's checking the expenses side, he's checking the income side, while he's doing test of details, he may not able to consider various things like abnormal fall in the cost of manufacture or that in the administrative cost. Why? Because that too he's going to that too he's going to consider only when he compares this data with that of the previous year, right? And comparing of data is nothing but what? Performing analytical procedure. So that is why it is mentioned that an abnormal fall in the cost of manufacture, that in the administrative cost. See, if you're checking the financials of the current period only, the P&L, the income expenses of the current period only, can you give your opinion or can you see whether there is the increase or fall in the cost, whether it is normal or abnormal, unless and until you have considered the past year trends. So it says that he must also check the vouchers for 1 month immediately before the close of the following years also, to verify that none of the expenses in the accounts under audit have been charged to accounts of the following years. Often it is possible to independently verify the correctness of some of the items included in the profit and loss account. So here the example that is been given is with respect to the reasonableness test that the auditor may perform. Like this is the amount of goods, these are the this is the duty percentage. So how much tax is to be paid or how much duty is to be paid. So this is with respect to the reasonableness test that we have done much in detail. Is it clear? Is it clear? Whose doubt was it? Sukaina, is your doubt clear? Then there is doubt of Shoaib also. Which third point, Shoaib? Page number 4.30, selection of specific items to obtain information. So let me just open the concern number 30. See, selecting all items. So it can be selecting all items, that is whereby 100% examination auditor will conduct, but this is not practically possible. To selecting specific items, so it can be high value item or all items over a certain amount, or okay, so Shoaib is saying items to obtain information. See, it basically means that what is the topic? Selecting specific item, right? So that selection of specific items can be based on various criteria, like all high value or key items, that any item which exceeds 5 lakh, that will be taken, right? Or all items over a certain amount, again, this example, items to obtain certain information. So let's say the auditor wants to obtain information with respect to the transaction with ABC and Associate, ABC Limited, right? X Limited is the client. So with respect to all the transactions of ABC Limited, auditor is going to take that data. So to obtain particular type of information, or let's say auditor wants to take the information with respect to all the plant and machinery only. So he will obtain information with respect to that out of all the assets. So is it clear, Shoaib? Sukaina is saying clear. Shoaib, is your doubt clear? So whatever information auditor decides, with respect to that, auditor may select the relevant items. Okay, Shoaib is saying it is clear. Others also please reply in case you have any query. Please send in your queries. And with this, students, like I'm waiting for your replies. If you have any query, I'll definitely solve that. Just give me a minute. So now ending this entire series of your revisionary classes. First of all, I'd like to wish you all the best. And as this quote has been mentioned, that the greater the effort, the greater the glory. So students, believe me, if you just, go through these modules, the 2 modules, I'm specifically talking about our auditing and ethics subject, paper number 5. You just go through these modules, right? Once, twice, the discussions we have had, now I am sure that you will be able to remember all the discussions, right? Try to learn, and in fact, you should learn the keywords. And since you must have gone through the modules twice, which I always say once or twice after the session itself, so you must have remembered the concept in the language that is expected out of you. So the keywords must have imbibed in your mind. And if these are not, then please highlight the keywords and try to concentrate your energy in understanding. So understanding can be in the language that is comfortable to you. But try to learn to pick up the keywords and try to remember that, right? Auditing and ethics subject, students always say that they are not able to clear it or they find it difficult or technical. See, it is a theoretical subject, but based on 100% practical implementation. And this subject is going to make a foundation of your paper number 3 in your finals, right? So concentrate on what is mentioned and just imagine yourself in a situation. So when you ask me that, ma'am, how to give answers to the situation-based question, just put yourself in that situation. Try to analyze as to what are the audit procedures that can be applied. What are the audit evidence that I can obtain? Just write those answers. And students, yes, you're reading the modules in entirety, including the illustrations that are given, including your test, your understanding test, your knowledge questions, all the case studies that are given is really very, very important. You have seen that one of the topic in audit of banks relating to SMA, though that topic is not here, but one of the question has been discussed, right? So go through the module. We are here to help you out, and these sessions are for your benefit only, right? So wishing you all the very best. I'm sure that now we'll be meeting for your classes of finals, right? So hoping that you all will, and I'm sure that you all will clear your auditing and ethics subject, and in fact the other subjects also with the flying colors. But yes, for that hard work is required. So as I was telling you, the greater the effort, the greater the glory. Hard work is what is required and what is the need of the art from all of you, right? So I hope you have understood from these sessions for auditing and ethics subject, and I hope that I have helped you in understanding, in revising, and in remembering also, and in understanding as to how to write in exam. because you are going to get marks for what you are going to write on your paper, right? So attempt the mock test papers, the revisionary test papers, do each and everything what you can do and achieve good marks in this subject. So with a very positive note and hoping that now I'll see you for the revisionary classes or the other classes for final. So all the very best, students, and thank you so much for being patient listener, for making the sessions that we have had, 25 sessions. You have made them very interactive. Thank you for that and all the very best. Session is over.